Berg is head of commodity research at Commerzbank, and he joins us now on the line from Frankfurt to talk more about that space. Eugene, hi, good to have you. How do you look at the crude oil prices as this trend now? Are you taking cues from the U.S. output, the OPEC, or on what's happening in Syria and North Korea?
Yeah. Hello. First of all, the market tends to be a bit short-sighted at the moment. The market is looking at the data from the API report, and also is probably concerned about the geopolitical tensions having an impact on the whole area in the Middle East, which is by far the most important exporting oil area worldwide. So definitely the market is looking at this and is a bit of concern, but looking forward and looking not to the May, but beyond probably the next 3 to 6 months, we must come to the conclusion that the market is still very much oversupplied or pretty amply supplied, and this situation is likely to continue. And if we expect, if the OPEC doesn't come to a definitive agreement in May, that the prices will take into account and will come under massive pressure. And it's still questionable whether this agreement in May will be holding for a longer period of time and will be fulfilled to the same extent as the agreement from November is being fulfilled. So I'm remaining concerned, and we keep expecting the prices to fall significantly below $50 during the year.
So since you are expecting the prices to decline, what kind of a support or a floor are you seeing here? And is there a range that you're working with for this quarter or the rest of 2017?
Yeah, definitely the most important marks would be, again, $50 and $55, which the Brent is trading above both of them. But should the sentiment change in the market, and we expect this swift change in the market as the market recognizes that the OPEC agreement doesn't fulfill its goal, and its real target is to reduce the extremely amply supplied OECD inventories. Should the market come to this conclusion soon, then the prices are likely to fall below $50, probably already this summer. However, the geopolitical tensions postponing it somewhat. On the same time, at the current prices, the production rise from the F is likely to be even greater than expected before. Looking at the data from the Energy Agency in U.S., from the Department of Energy, we see that during the last months, during the last 6 to 9 months, the revisions to the upside for the end of 2007 production were above 1.3 million barrels of U.S. production. This is more than enough to offset the production declines.
So where do you see an upside then? If you're looking at prices to fall below 50, is there an upside that you're looking at? Do you think 58, 59 is the max?
Yeah, there is definitely an upside should the situation escalate right now in the Middle East, or should the market get concerned about the compliance of the OPEC being so stubbornly high, above $100, and belief into the OPEC strategy, then we are likely to jump also above $60. So I wouldn't be ruling it out, but still we are very much concerned in a longer period of time, because from the fundamental point of view, the exports from the OPEC are remaining quite high. The situation remains very much supplied or oversupplied, and therefore there is no real justification from the fundamental point of view for the current high prices. It's probably very much speculatively driven.
Right. Eugene, before we let you go, come in on gold prices also, because what a rebound is what we've seen there in last 48 hours, trading at a 5-month highs. How much of an upside would you see on this one?
This is very much driven by the fear, and unfortunately this is not a very sustainable factor. We forecast from the very beginning of this year that the prices would go higher towards $1,300 by the end of this year, and we were right about this, but we were not taken into our account the geopolitical tensions. And I
see a 1,300 coming in.
Yeah, definitely. But definitely, we also wouldn't be surprised to see the prices falling towards $1,200 should the dust settle over the next weeks and over the next months, and no geopolitical concerns playing the role. So, should the situation calm down a bit, I wouldn't be surprised to see a setback also in the gold prices.
Your point is well taken, Eugene. Thank you so much for coming by and giving us that sense on those commodities. So, of course, the kind of run-up that we are seeing in commodities, that is especially crude and gold, is short-lived, is because of the kind of impact